the mindset of building business credit. Start with a plan. What do you really need to pay for? Is it office furniture, licenses, stationery, legal fees, punch presses, or something else? Put together a rough estimate of what it all will cost you. This is your shopping list. Consider multiple ways to get what you need. There are multiple ways to get what you need. Can you get office furniture at IKEA? How about coffee or mini blinds at Walmart? Or a used dry cleaning machine from someone retiring from the business? How can you find multiple sources for your needs? How can you get your needs filled more quickly? Maybe you need to start taking deliveries at the office, or you might be able to drive to where something is and pick it up. Maybe you should start looking for sales early. Consider your financial needs. Every business needs money. How will you get yours? Think creatively. How can you get the funds you need? Business legitimacy is not just a good idea. We talk about how to set up a business so it's legitimate. This is not just to check off a bunch of boxes. Rather, it's to give lenders a feel for your company being on the up and up. Creditors want to trust you. Make it easier for them to do so. Let's look briefly at starting a business plan. Get your ideas in writing. Who's your typical customer? How will you market to them? Get feedback from mentors. Business mentors are people you know. They might be former bosses or family members who own companies. They can even be people who failed. Ask them, are you being realistic? Next, set up a business address. Working from home? Then you will need a virtual office. Try alliancevirtualoffices.com. D&B recommends virtual offices. Never use a P.O. box or a UPS box. Need a brick and mortar address? Entrepreneur Magazine says location is your #1 concern. Consider your target market and where your competitors are. Take advantage of their research. Be sure the area is zoned for your type of business. Select a business entity. File this with the Secretary of State. Consider a DBA status for sole proprietors. If not, then your business name is the same as your actual name. Business entities define tax and liability obligations. Get a business phone, fax number, and a 411 listing. Toll-free phone and fax numbers are best. Lenders and customers see these as more legit. Go to 411.com to get listed. All of this builds business legitimacy. It will also build your confidence in your business. Get a web domain and pro website. Buy hosting from companies like GoDaddy. Don't use Weebly or Wix. It needs to be your domain, not domain.wix.com. Use Upwork to get set up. Get a professional logo from Fiverr. Work with the Internal Revenue Service. Get a free EIN at irs.gov. All businesses need to pay taxes. Also check with your state's Department of Revenue or Taxation. Get set up now. Avoid nasty surprises later. Get all needed business licenses. Check with your local Secretary of State. Check the city or town too. Licensing requirements differ. Differences depend on state, town, and industry. Get a business bank account in the business's name. Try the bank where you keep your personal accounts. This bank already knows you. They know your reputation for paying your debts. This opens up financing options. It affects legal and accounting. Get a business merchant's account. Now your business can accept credit and debit cards. Studies show that customers will spend more if they can pay by card. This also increases your finance options. Let's look at budgets and finances. Revisit your budget often. It can be tempting to just max your personal credit cards, but don't do this. You'll ruin your personal credit. There are much better ways. What about early funding opportunities? Talk to people you know. These are family, friends, or coworkers. They may want to be angel investors. The money they provide can be small, or you can consider crowdfunding. Leverage the assets you already have. Those might be retirement funds you have saved, or your ability to line up investors, or your creativity, whether artistic or inventive. There are many ways to get business funding. Some of these depend on your industry. They may also depend on your time in business or your ability to secure collateral. Our favorite is building business credit. Business credit is credit in the business's name. It's not in your own. It depends on the company's ability to pay, so you can get it even if your credit is less than stellar. If you don't have a good enough FICO score to qualify for other options, then it is time to start building business credit. But you should be building business credit even if your FICO score is superb, because business credit can help a business at any stage. Building business legitimacy pays off here. Vendor credit is a proven means of getting started in building credit. It's called vendor or trade credit. It is often very easy to get. There often is no consumer credit pull. A business should get its first 5 to 8 credit accounts via vendor credit. When we say to buy from vendors like Quill and Uline, we aren't just telling you to go through the motions. Rather, consider your shopping list. Uline and Quill in particular offer all sorts of things. Uline sells more than just shipping boxes. They also sell cleaning supplies, packing tape, poly bags, and more. If you need to ship anything, why not buy from them? Quill sells light bulbs, computers, working gear, and more. If you need food service or medical lab supplies in particular, why not buy from them? If there are 5 to 8 trade lines reporting, then a business can move on to revolving store credit. This will be at places like Walmart. Sometimes, in order to establish good store credit, a business will have to buy some things it does not need. But look around. Surely Walmart will have something. Walmart seems to sell everything. This includes hardware, flooring, tablet computers, and phones. If you need any of these for your business, then why not buy it from them? If there are 10 revolving store credit lines reporting, then you can advance to the next step in building business credit. Fleet credit comes from places such as Chevron. Keep going. Work toward 10 to 14 or more trade accounts. Fleet credit is a credit card which helps a business maintain a set of vehicles. These are usually fuel cards. They can be used to buy fuel, repairs, and maintenance, buy tires, oil, and wiper fluid this way. When there are 14 fleet credit lines reporting, then a business can move on to cash credit. This comes from companies such as MasterCard. It's accepted a lot more places. Good business credit will help a company get loans in the future. Build business credit as a way to grow your business. It is not just a means to an end. It is not just a way to get a Visa card. For other funding options, get creative. Here are several choices for funding. 401k financing is another great option. Use an existing 401k or IRA as collateral for business financing. These are IRS-proven strategies with no tax penalties, and you can still earn interest on your 401k and pay low rates, often less than 5%. Close and fund in less than 3 weeks. Get up to 100% of what you can roll over within your 401k. There are no consumer credit score requirements. Even a startup company can be approved. You will not need a tax return or a bank statement review. The business can get an approval for a loan equal to 100% of the value of the 401k. The idea is you are investing the 401k in your own business. This is instead of buying stocks in other businesses. There are no tax ramifications. Securities financing is another method. You can also get financing regardless of personal credit if you have some kind of stocks or bonds. You can also get approved if you have someone who wants to use their stocks or bonds as collateral for financing. Personal credit quality doesn't matter. There are no consumer credit requirements for approval. How about turning to angel investing? Angels are essentially informal investors. They generally invest in the start of a company. This is often in a swap for equity. So you will give up partial ownership. Angels can even invest via a crowdfunding platform. Known angels are called affiliated. Angels you didn't know before are called unaffiliated. Companies can connect to affiliated angel investors by just asking. Companies connect to unaffiliated angel investors in about the same way they can connect to others who can help them who they don't know or don't know well. Through advertising, business brokers, cold calling, and intermediaries and networking. Ask the person you know who seems to know everybody. This can even be the person who cut your hair. Venture capital might also be available. Venture capitalists will give money to help build new startup companies, but only if the VCs believe a company has both high growth and high risk potential. These are often fast growth companies with an exit strategy already in place. Venture capitalists will often want to recover their investment within 3 to 5 years. They also often want to own a large piece of a company, if not a controlling stake. Hence, you are giving up more control than with angel investors. Venture capitalists will look for a strong management team, a large potential market, a unique product or service with a strong competitive advantage. Grants could also work. Grants are great because they are like scholarships. You don't have to pay them back. HUD, Housing and Urban Development, is one agency which hands out grants. If a business is not related to housing or city development, then it won't be approved. But if it is, then HUD grants are another means of getting funding. Search for HUD grants here. NOFAs, Notices of Funding Availability, include the contact where to send an application. If you are applying for more than one HUD grant, it has to be a separate application under the correct NOFA. HUD won't take a combination of NOFAs. For more rural industries, try the USDA. Find them at www.usda.gov/topics/farming/grants-and-loans. The USDA doesn't just give grants to ranchers and farmers. They also give grants to housing preservationists and providers, waste management companies, and energy companies. A state or local government might provide grants, offer a partnership to the state, city, or town, ask for local government support for a project. Try to address a specific local government need. Unsecured business credit lines are another resource. Use your assets as collateral. These can be personal assets like a 401k, or business assets like equipment owned outright. Get 0% business credit cards with stated income. No financials will be required. You can get up to $150,000. You will need to have a credit score of 700 plus. Unsecured bank lines of credit are yet another option. Some alternative lenders are now offering LOCs for $50,000 to $150,000. They will often only want tax returns instead of all income documentation. If over $100,000, you will need to supply a P&L and balance sheet. These are 30 to 45 days to close and fund. Rates often run from 7 to 10%. The approval amount is often 10% of annual sales per their tax returns. You will need to have an experience score of 700 or higher to qualify. Crowdfunding can also work. Crowdfunding comes via platforms like Kickstarter or Indiegogo. It gathers money from a lot of people instead of one big investor. If the crowd likes an idea, they may decide to donate to a project. A good pitch will be vital for success. If you are a persuasive speaker or writer, then crowdfunding might be right up your alley. Get donors excited about donating. Evoke emotions in them. The most effective feelings are novelty, where a product or service is new or the spin on an existing one is new. Or urgency, they must donate now. Or scarcity, they can't get it anywhere else or it's running out. And there's also the cool factor, where the product or service is cool and has cachet. It can be a rush. It can also be disappointing. Organized campaigns do better. They are also more likely to fulfill their promises. Let's recap. Consider your needs from the very start. Set up your business with legitimacy in mind. Find mentors. Tell your contacts about your idea. Build business credit in parallel to growing your business. It's not just a means to an end. Look for funding by leveraging personal assets as collateral, or seek angel investors or venture capitalists. Consider crowdfunding or grants if appropriate. Unsecured business financing can also help. Love what you do. Contact us today to learn more about the mindset of building business credit.